Hi, I'm Ashikul Amal from Accounting Syllabuses. Welcome to my channel where I upload accounting tutorials weekly. Today in this video lesson, I'll show you how to make journal entry for bad debts and provision for doubtful debts. Let's get started. Okay, here look at the question on the screen. Shilpa Gandhi is a trader. Her financial year ends on 31st January. Okay. On 31st January 2010, the balances in her books included the following. Okay. So here some balances are given. What balance? First one is bad debt written off $210. Okay. Then trade receivables or trade debtor or accounts receivable, whatever you call it, is $15,530. Okay. Then there are some more information given in the question. Have a look at there once again. On 31st January 2010, Shilpa Gandhi decided to number 1 write off $90 owed by casing. Okay. Number 2, create a provision for doubtful debts of 2.5% of the remaining trade receivables. So here we have two adjustment, okay, and some information is given. Okay, so from this information, what is our requirement? Let us have a look at there once again. Prepare the entries in Shilpa Gandhi's journal to record the following transactions. Okay, number 1, writing off the bad debts. Number 3, transfer the balances of the bad debts account to the income statement. Okay, number 3, creating the provision for doubtful debt. Okay, so for these 3 transactions, we need to make journal entries here. Okay, so this is very common topic, so many students do not know how to make journal entry for this type of transaction. So today I will show you here how easily you can prepare this entry. Okay, so before we start, we need to know what is a bad debt. It is the term used for any outstanding balances that a business deems uncollectible. It is also a receivable that a customer will not pay. This means that a specific amount is removed from the accounts receivable, okay, and a bad debt is an expense for the business. Okay, so this is an expense, so we have to enter these expenses in the income statement when business prepares it. Okay, so now what is the first adjustment in the question? It is writing off the bad debt. So here already you know that bad debt is an expense, yeah. So expense will be debited. So expense is increasing here. So expense will be debited, and the customer, who is the customer here? Customer is here, casing. Okay, so casing will be credited. So let us write here first of all number 1. Okay, so as we know, bad debt is an expense, so it is debited. Okay, and then customer or accounts receivable, it is casing. So casing will be, okay, so what is the value here in the question? It is $90. Okay, so let us write here in the debit side $90 and credit column $90. So we are required here to write a narrative, okay, short narrative. So what can we write here? We can write bad debt written off. Okay, so first one is done. Now we have to do second one. So have a look at the question once again. Number 2, transfer the balance of the bad debts account to the income statement. Okay, so now we have to transfer this amount, this $90, to the income statement. Already you know bad debt is an expense, yeah. This expense will come in the expense side of the income statement. Okay, so here we have to debit the income statement. So let us write number 2, debit the income statement, and bad debt will be credited. Okay, so what is the value? I said it is same amount. This $90 will be transferred to the income statement. Okay, very simple. Okay, now we need to write a short narrative here. Okay, so what can we write here? We can write the same thing, transfer, transfer, transfer bad debts to income statement. Income statement is also called profit and loss account, yeah. Okay, so we finished second one as well. So now Number 3. Look at the question here. What is written? Creating the provision for doubtful debts. Yes, now it will be a bit challenging because we need to create the provision for doubtful debts. But what is the entry here? We have to create provision for doubtful debts. Okay, so already you know that we need to create provision for doubtful debts on accounts receivable. Yeah, we have here accounts receivable, which is 15,530. Okay, so from this 15,530, $90 is bad debt. So $90 will not be recovered. Okay, so we have to subtract this value. Okay, then in the adjustment, have a look at the question once again. Number 2 is written that create a provision for doubtful debts of 2.5% of the remaining trade receivable. That means after subtracting the bad debts, the value we get, then on this value we need to calculate provision for doubtful debts. Okay, so let us write here the calculation we have here. Accounts receivable or trade receivable, whatever you call. It is $15,530. Okay, so from this amount we cannot collect this $90. So casing is a customer, casing will never pay this amount. So this is a bad debt, so we have to subtract this bad debts. Okay, so students often make mistake here. They do not subtract, but they directly multiply the rate of provision for doubtful debts by this accounts receivable. Okay, but that is not correct. So here it is $90. So let us subtract this $90. So it is $15,440. Okay, now we can calculate provision for doubtful debts on this amount. Okay, so provision for doubtful debts will be provision for doubtful debts will be here 15,440 multiplied by 2.5%. Okay, now if we calculate, we get $386. Okay, so this is provision for doubtful debts. This amount will be included in the income statement. Okay, this is an expense as well for the business. Okay, so here we will write number 3. So income statement to be debited and provision for doubtful debts to be credited. Okay, so what is this? This is $386. So let us write here 386 and credit is 386. Okay, so we wrote this journal here. Now we need to write a short narrative here. Okay, so what to write? We can write provision for doubtful debts is created. Okay, provision for doubtful debt is okay. So very simple if you understand. So let us review once again. First one is bad debts. This is an expense, so expense is debit and the customer casing is credit. Okay, the amount is given in the question. Okay, second one is here we transfer this bad debts to the income statement. So income statement is debit because it is an expense, bad debt is an expense. So income statement is debit and bad debt is credit. Okay, so here we are required to create 2.5% provision for doubtful debts. Here we created, we calculated here, we subtracted the bad debts to calculate the provision for doubtful debts. Then we multiply by 2.5%, we got $386. So this $386 will be transferred to the income statement. Okay, so creation of provision for doubtful debts means we are creating an expense. Okay, we are taking an expense to the income statement. Okay, so here again income statement to be debited and provision for doubtful debts to be credited. Okay, so very simple calculation, very simple transactions, simple journals. I hope you understood and enjoyed this lesson. So please consider subscribing to my channel because there are so many other video lessons. This will help you to prepare yourself for your accounting test or exam, whatever you call. And please comment below, let me know what you want to see in my next video. So that is all. I'll see you soon. Until then, bye bye and take care.